Have you ever wondered why that statistic 90% of traders lose money is so famous? It's not because trading is some impossible dark art. It's because most people make the same critical mistakes over and over again. Let's break down exactly what those are, and you can see how many you might be making. First, and this is a big one, most traders never actually verify that their strategy works. They watch a YouTube video, see a cool setup, and start trading it with real money. They don't backtest, they don't journal, they have no statistical proof that their strategy has a positive expectancy. They mistake a setup working once or twice for having a real, long-term edge. That's just gambling with extra steps. Next up, risk management, or should I say, the complete lack of it. New traders often risk way too much per trade. We're talking 5, 10, even 20% of their account on a single idea. They don't set a maximum daily loss limit. What happens? One really bad day, just a few losing trades in a row, can wipe out weeks, or even months, of hard-earned progress. Your account gets blown up and you're back to square one. Then comes the emotional roller coaster. This is where psychology takes over and destroys accounts. You get a winning trade, but you cut it short out of fear, grabbing tiny profits. Then a trade goes against you and you let it run, hoping it'll come back, turning a small, manageable loss into a catastrophic one. You experience a loss and immediately jump back in to get your money back. That's revenge trading. Or you see the market rocketing without you and jumping at the top out of FOMO, fear of missing out. Every one of these emotional decisions is a step toward failure. This often leads to overtrading. You feel like you have to be in the market all the time. You're trading out of boredom, staring at the charts, and forcing setups that just aren't there. Successful traders wait patiently for their specific, high-probability setups. Unprofitable traders are just clicking buttons because they feel like they should be doing something. And why do they do all this? Usually, it's because they have no trading plan. A trading plan is your business plan. It answers critical questions before you ever enter a trade. What time of day will you trade? What specific conditions need to be met for you to enter? What price action will invalidate your idea and tell you to get out? Where will you take partial profits? And crucially, when will you stop trading for the day, whether you're winning or losing? Without a plan, you're just navigating a storm without a map or a compass, even if you have a plan. Inconsistent execution will kill you. You might decide to change your stop-loss mid-trade because you feel like it'll turn around. You see a perfect setup according to your plan but hesitate and skip it out of fear. Then, you take a trade that doesn't meet your criteria at all. This inconsistency means you never allow your statistical edge to actually play out. Unrealistic expectations are another account killer. People come into trading thinking they'll get rich quick, turning $500 into $100,000 in a few months. They expect to make money every single day, and they think one losing day means their strategy is broken. The reality is, trading is a business of probabilities. Even the best traders in the world have losing days, losing weeks, and even losing months. It's part of the game. Another huge mistake is ignoring the overall market condition. You can't use the same strategy in every environment. Trying to trade breakouts in a choppy, sideways market will get you chopped to pieces. Trying to fade or short a powerfully trending market is like standing in front of a freight train. You have to adapt your approach to the current market context. Underlying all of this is poor psychology. Many traders have a deep-seated need to be right. They attach their self-worth to the outcome of a trade. They can't accept being wrong, so they can't accept the loss. On the flip side, a few wins can lead to overconfidence, causing them to take bigger risks and give all their profits back. And of course, leverage is gasoline on this fire. It amplifies every emotional reaction, every mistake, and every drawdown. So, how do you fix all this? You start by journaling and reviewing every single trade. If you don't track your performance, you can't identify your mistakes. You'll just keep repeating them for years. Without data, you can't make smart, objective adjustments to your strategy or your execution. And finally, people either quit too soon or they strategy hop constantly. Every strategy will have a period of drawdown. It's statistically normal. But when it happens, most people panic and declare the strategy broken. They jump to a new one, and then another, and another. They never stick with one system long enough to master it and let its edge play out over a large sample of trades. So, you see, most traders don't lose because trading is impossible. They lose because trading is a mirror that exposes all our human weaknesses: impatience, ego, a lack of discipline, and poor risk control. If you can identify these weaknesses in yourself and build systems and rules to manage them, you put yourself on the path to joining the successful few. Thanks for watching. If this helped you see your own trading in a new light, hit that like button and subscribe for more content to help you on your trading journey. See you next time.